Hi, everyone. This is Jason Bierk of Wall Street from Main Street. Welcome back for another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. She used to work on Wall Street for many years at banks like Lehman Brothers. I think she was one of the heads of their currency trading division. She went and worked for ITM Trading for many years as their chief market analyst. She is now CEO and founder of Zang Enterprises. Lynette Zang, thank you for joining me again.
I'm very happy to be here, Jason. Thank you so much. And I didn't actually work on the trading desk at foreign exchange at Shearson, but it was the head of foreign exchange that taught me everything that, well, at least the beginning part of what I started to understand about currencies. And she was phenomenal.
Okay, well, thank you for correcting that. I actually had a currency question here. I'm just seeing bad policy after bad policy from all these governments, retaliation, trade wars. They don't look like they're cutting spending. Are we seeing kind of do you think the end of this fiat currency experiment with debt-based fiat currencies and governments monetizing their government bonds?
100 bazillion%. Yes, that is exactly what I'm seeing. It's already been modern money theory where they just keep printing. But now, yeah, definitely the system is breaking down and there is no other alternative but just to print and monetize that debt and try and create new collateral and keep this. I don't know. Do you think the new system is ready for us to transition into? I'm not sure.
I don't know. That's a tough question. I mean, we see like them issuing progress reports on central bank digital currency, but I don't think they have most of the systems set up yet. I mean, they're still it's small pilot programs for that stuff.
Yes, but there are other programs that are, that are really growing pretty rapidly, like stablecoin. And so I'm wondering if they are going to bypass the central bank because corporations issue the stable coins. And the new legislation that recently came out of this administration means that every stable coin that's issued has to be backed on a one-to-one basis with dollars, right? So it forces corporations to buy and hold dollars in treasuries. And can that area grow fast enough to make up for the foreign governments that are turning away from our treasuries?
Do you mean by stablecoins? Do you mean Tether, or are you talking about something else?
Well, it would be Tether and other stable coins. There's more than one. There's a whole bunch out there, and a lot of the corporations and banks are issuing, well, banks are corporations. They're issuing their own quote unquote stable coins. And I'm not really sure how stable they are. That's just the name of them. But we've seen in the past that, yeah, sometimes not so stable. And if a big one goes down, like Tether, since you brought Tether up, is that enough to create some kind of financial implosion?
Yeah, I think when they talk about stablecoins, I think that's just marketing material because you don't know what stability means. I mean, like Tether is called a stablecoin, Lynette, but the stuff backing Tether, I mean, weren't they buying a lot of long-dated US treasuries that had losses on them years ago, like 10, 20, 30-year bonds only 4 or 5 years ago? And I think they were even buying junk bonds at some point.
Exactly. Exactly. You always have to be careful, but there was legislation that was just recently passed that forces anybody that's issuing stable coins to back them one-to-one with the dollar. And I don't have this data right in front of me, but I'm pretty sure something like 99% of all stable coins are issued in terms of dollars, US dollars.
Well, I think the larger macro theme, and I've been talking about this for the last 6 to 12 months, I think we're seeing the non-G7 central banks based on bad policies out of DC. And really, I think it accelerated the last 3 full years with the Russia sanctions. They've just decided we don't like either political party in DC. We don't like what the White House is doing with spending and sanctions. We don't like what Congress is doing, no matter which party's in control. We don't like the budget deficits and the math. And I think these non-G7 central banks, they just decided they're not going to be large buyers of treasuries and they're going to dollar cost average each month gold. I think that's like the main macro trade been going on for a couple of years now.
Oh, I would agree with that so much, Jason, but I would actually even expand it not just to the non G7. We've actually been watching Japan and China reduce their holdings or reduce their buying of treasuries since 2013. That's when that started shifting. It didn't just recently start. And what I see is the creation of a doom loop, right? And what I mean by that is it's the 10-year treasury that underpins the global financial markets. And yet you have countries that are turning away from buying and therefore, quote unquote, supporting the 10-year treasury that underpins the global financial markets. And so the worse that gets, then the more desperate that to change things that the US government gets. And it's just creating this huge doom loop. And we don't know where that bottom is, but that's the whole point of getting to physical gold in your possession and physical silver too. And becoming your own central banker by actually buying physical gold and silver outside of the system. Because who in the world really, really knows the crisis and the deprivation and the chaos that yet lies not that far ahead of us?
I think Trump and his Treasury Secretary Scott Bessent are confused by the 10 years Treasury, like you said, the yield spiking, because they announced today a positive that the negotiations are actually advancing with China. And we're recording this interview on Monday, May 12th, 2025. The gold price has gone down about 3.5%, over $100 an ounce on this Trump trade deal announcement that they're actually making progress with. They're going to lower the tariffs for at least 90 days. But Lynette, to add to your point there, I mean, the 10 years treasury yield, it didn't go down. You'd think that, I think Trump and Bessent, they want a weaker dollar. They want the bond yields to go down so they can start refinancing some of this debt. They inherited such a mess with the rapidly growing national debt. And yet the yields were up to 4.45% now on the 10 years treasury. That's probably not what they had planned.
No, not at all. But I've never figured out a way to have my cake and eat it too. So you can't have a weaker dollar at the same time that you have lower yields. Or maybe you can, because they're both inflationary, right? A weaker dollar is inflation, and so are lower yields. That's inflationary because it inspires more borrowing and more spending. And so, yeah, I think not Treasury Secretary, but Chairman Powell over at the Fed, gosh, I mean, I wouldn't want to be in his position. I'll say that. It's a tough position to be in because no matter what he does, there will be unintended consequences. And Jason, I can't sit here and say today that just because the U.S. and China is sitting at a table negotiating and having some things postponed for 90 days, I don't know that there hasn't already been a certain level of damage that cannot be repaired that we just can't see yet.
Well, I mean, look at the People's Bank of China, their gold purchases. So I think you said that the trend was already that these countries were selling treasuries. I mean, post-Russia sanctions in early 2022, the amount of gold purchases each month has doubled. So I think countries, these central banks, non-G7, they're voting with their dollars. They do not want to recycle into treasuries. They're dollar cost averaging. They've doubled the monthly gold tonnage purchases. They're just dollar cost averaging. That's all it is.
Yep. Absolutely. And getting into position to maintain their freedom and their power. And that's what gold does for you.
Well, especially if DC is going to confiscate 300 billion of reserve assets and then all 50 billion a year in interest payments on the debt. I mean, like the people in DC think oh, we got Putin, and then he's just buying all the gold mining and buying all the domestic gold mining in Russia and then adding more gold.
Mm-hmm. Yeah. Because gold, this is so important for people to understand that gold, physical gold in your possession is above all central banks and all other governments. It ensures your freedom because no matter where you go or what you do, you have money.
Well, and also it's not going to go to zero. And I mean, like some of these currencies, it looks like whether it's Australian dollar and that gold price, Lynette, actually has outperformed, I think, almost every other gold price. The gold price in Australian dollars has gone up so much the last 3 to 5 years. It's almost a parabolic chart. These other currencies too. So that everyone talks about the US dollar gold price, but the gold prices in so many of these other currencies, it's a parabolic chart now.
Yes, it is. And actually the chart looks pretty parabolic even in the US in terms of the US dollar, even with this pullback. Right? It's just risk off, risk on, risk off, risk on, risk off, risk on. You think if we're going to play that kind of game that there isn't something that could possibly or may have already happened, that it's so hidden because our products these days, our financial products, Wall Street products, are incredibly complicated and getting even more complicated. So that even the people that created them really can't see when there's a trigger that's pulled. That's how complicated these things are. I mean,
Are,
it's the Hades out of me. I'm not going to lie.
Are you talking about like U.S. Treasury collateral in the system with it being hypothecated and rehypothecated? Because there's been rumors for years that the collateral, the U.S. Treasuries, has been hypothecated so many times that they can't keep track of these older treasuries. They don't have the documentation for these things. You're saying that that will cause problems with the banks and the derivatives?
Absolutely one of them, but there's even so many more because of this rush of the technology and everybody adopting it. Okay, we're looking at CBDCs. So President Trump said no CBDCs in the US, which maybe that's true, maybe that's not true, but we're looking at tokenization, which is a big fat experiment that makes everything that is so extraordinarily complex right now even more complex. And it enables additional leverage because it brings in what has heretofore not the banks couldn't use as collateral, but now it enables them to bring in these assets as collateral to then extend even more leverage. So there are lots and lots and lots of different layers, Jason. And I guess that's what I'm saying. It's not just one area that all of this experimentation, untested experimentation is going on. It's in multiple areas. And when you take into consideration the on again, off again, risk on, risk off, this and that, and then, you know, there's
Well, the policies are so anti-freedom, Lynette. I mean, like, look at this for getting on an airplane now. You have this real ID stuff, and I think the plan there is to put what a GPS tracker and other things in there besides just your smartphone. They've been talking about this for decades. So now the new ID technology, and then I think in Spain just this week they
yes.
announced that they're suspending what a bank account. Yeah, there's a maximum amount of cash that you can take out in euros in Spanish banks. So that sounds like kind of a financial kind of a bank run kind of thing, or they're trying to stop a bank run.
Yeah, exactly. They are trying to stop a bank run and keep the cash in the system. And that is indeed happening in Spain. But quite honestly, I've been watching it happen here in the US since 2008 as we've lost rights after rights after rights or normal policy. Like my daughters were in college in 2008 and I would go in and I would make a cash deposit in their accounts every week, so that they could buy food or do whatever they're going to do because they weren't local. They were one was in Tucson, the other was in Florida. Well, after 2008, I couldn't deposit cash into my children's accounts, right? That's just one really simple example, but I've been watching us lose more and more and more of our freedoms and rights. So this is moving toward a full surveillance economy. And there is a way to avoid it for the individual. And,
And
and
the banks don't even, the regional banks, Lynette, don't even keep a lot of cash on hand. And now what they flag you if you take out $10,000 in donations at one point, but if you need cash, let's say you want to go buy a used car or something like that for cash, they might not even have the cash on hand. So they're going to ask you, what do you need the cash for? You're going to get like interrogated for wanting your own cash back.
Exactly. Well, because it's just your impression that it's your cash. You've really loaned them the money. But, and it's not just in the regional banks, but the regional banks, people ask me all the time, well, are credit unions or community banks or regional banks safer than the commercial banks? Well, those other entities depend on the commercial banks for their cash. So it's not even a big problem that you have to wait. It's that interrogation part. Because what that's about is intimidating you to changing your mind and not taking what you perceive as your money out of the system. Because once you do that, it's much harder for them to confiscate it. And that's why having physical gold and silver in your possession is so critically important, because you can always then systematically convert it into any currency you want anywhere in the world. And you were right when you said that it's never gone to zero, but it's never gone to zero because it's used in every single sector of the global economy. So you have the broadest base of demand. And isn't that what you want for a money is you want broad demand. And what we have is demand in one place only, right? It's
And
just,
well, also a lot of people in the gold and silver community for many years were talking about using like credit unions and community banks, but what they don't understand is that if that bank gets into financial trouble and they need to have emergency borrowing or penalty borrowing from the Federal Reserve Bank, their terms are actually so onerous that basically like the Fed's almost going to put them out of business. So keeping your cash at a community bank or credit union is not as good as a lot of people in the community, gold and silver community over the years claim, because if they do get in financial trouble, they don't get to borrow at the terms that like JP Morgan or Bank of America or Wells Fargo do if they get in financial trouble.
right. Yeah, that's good. That's a really good point. Yes.
Well, then that just means that like even more reason that you want like gold, physical silver, Bitcoin, maybe even cash like out of the system. Although at this point, Lynette, if you have a lot of dollars, I mean, like it seems intentional policy, whether you have dollars or euros or Japanese yen, they're going to intentionally devalue it. That seems like the game plan right now.
Darling, that's been the game plan since 1913. Intentional devaluation so that they regulate the rate and speed of inflation so that you, the individual, do not notice the difference and do not change asking for how much money you're asking for or changing your spending patterns. And the problem is, since we're at the end of this, I think this is really interesting. The inflation has proven to be sticky, but now we have tariff inflation on top of the regular inflation. And how is that really going to impact these negotiations? Because haven't a lot of corporations increased their prices to adjust for these tariffs? Are they now going to back down on those prices? Not if people are spending the money on them.
I don't know. It depends. I mean, if they raise the price too much, then the customer will switch to another brand or stop buying. So they could destroy their own customer and demand for the product. So it's kind of a fine line, and I don't think there is a right answer at this point. It's trial and error, and we're kind of being experimented on.
Oh, well, that's kind of normal. We are just the right size to fail. So if you're going to experiment, you want to experiment in an area that can't threaten you, except that the public can. Because I've been saying all year, and we're almost there, so we'll find out, am I right or am I wrong, that the inflation would be quite visible by June. And we've certainly been watching consumer sentiment and consumer confidence and inflation expectations go in the wrong direction for the Fed and for the government. They need confidence to be up and sentiment to be up so people feel comfortable spending. But when people think that inflation is coming up and they're unsure about their jobs and their positions, because look at all of the layoffs and look what's happening in the real estate market. I mean, God, Jason, how many gazillion hours do we have for this conversation? There's a lot going on.
I want to ask you about the gold to silver ratio. So I think last week it hit an all-time high of around 120 ounces of silver for 1 ounce of gold. What do you think the gold to silver ratio is telling us right now?
I think it's telling us that it almost doesn't matter, right? Because the gold to silver ratio, originally, wow, back in 1913, you had a 20th of an ounce of gold to an ounce of silver. But silver kind of straddles two worlds. It straddles the economic world because it's used so much in manufacturing. And so that's pulling the price of it down because of a global slowdown. But it is also at the same time the secondary monetary metal. So it's been struggling to hit the cup, so that $50 target. But I do think that I could see it being at 50 by the end of this year. I really could.
I think the gold to silver ratio is telling us that central banks are not dollar cost averaging silver, and that Main Street, a lot of Americans are not buying a lot of metal. They're buying what? They're chasing Nvidia, they're chasing Mag 7, they're chasing Bitcoin. They're not interested in gold or silver or gold stocks right now. So the demand pressure here is for Asian retail investors, mostly buying gold, maybe a little bit of silver, platinum, and palladium occasionally. I do hear that, but it's a central bank buying that's really driving the gold price way higher, and that's what's causing the gold to silver ratio, I think, to get to record highs.
Maybe so, except if you go back and you look, there was a shift in 2005 in terms of central bank gold buying. So or even in the selling, they were selling less and less going and buying more and more going into 2008, the great financial crisis. And that really shift started in 2005. And it didn't have much impact on the price of the spot price that you saw on the market, because a rising gold price is an indication of a failing currency. But what I really like to point out, because I think this is so critically important, is the fact that we see both gold and silver being sold in Walmart and Amazon and Costco, which are big box stores. These guys, it's not like they have any dealers there or are giving any service. But you have to say that if they're going to be selling those physical metals, that is because they've got demand from the public. I just don't want, I just think that Wall Street and the government does not want the purchase of silver all that visible. I think it's way more than the central bank buying, pushing, because honestly, look at the spot price of gold since that shift started in 2005.
And I
Right?
think to add to your points there, I think there's record demand for Costco for the gold bars, that people are just throwing like an extra gold coin or a gold bar to buy that into their weekly or monthly grocery purchases at Costco. But if you look at like some of the wholesale dealers like Amark in the United States, they're not selling too well. I mean, they're going and buying up numismatic coin dealers for pennies on the dollar. They're buying up businesses that almost have no profits or earnings, and they've been on an acquisition spree the last year or two.
Mm-hmm. Mm-hmm. We're in such an opportune moment in time right now for people to understand it. But when you're looking at Costco or wherever buying the gold and silver and not being able to keep it in stock, that's a public move. That's the beginning of the public move. And it's not just happening here in the US. It's happening all over the world. South Korea, China, all over the world. We're seeing the public really vigorously accumulating physical gold and physical silver. And I talk to people obviously all the time. We actually do at Zang Enterprises, we sell quite a bit of silver because it's part of our strategy, our sound money strategy. And you want to be diversified no matter what you're doing, but you look at your function. And for me, even with the manipulated spot, right, silver maintains your ability to purchase the same goods and services over time. So for example, in a Bureau of Labor Statistics, there a standard basket of food that they had since 1913 up until I think I just did this on the 5th, that went up something like 2,800%. But spot silver went up about a little bit more than 3,000%. And spot gold went up over 13,000%. So for me, silver is about barterability. And those that understand it, I don't really personally care very much about what that ratio is, because I put out, this is what I'm trying to accomplish. And so I can accomplish this with gold. I can accomplish this with silver. and I just buy what I need to accomplish what my goal is, whether it's sustaining a standard of living and knowing, okay, maybe I have to go buy a gallon of gas or I have to go buy strawberries, then I want my silver for that because I don't want to take a gold coin to the gas station. But on the other side of that, if I want something larger or I have a medical issue or real estate taxes that I want to pay or something like that, then I'm leaning more toward gold. And also because what has been targeted for inflation, so your stocks and your real estate and things like that, well, I think that the real estate bubble has been popped. And we're watching this more and more now in different parts of the country where the real estate prices, it's starting to become more of a buyer's market than a seller's market, which is what it was for a long time. Well, I want to do that with my collectible gold coins. So it kind of depends on what you're trying to accomplish, but having physical metals and some level of cash outside of the system, along with food, water, energy, security, barterability, which for me is silver, wealth preservation, which for me is gold, community, which has arguably become the single most important piece, and shelter. You want to sustain, you want to have the ability to be independent and sustain a reasonable standard of living. And I just don't think we have a whole lot of time left. So community, that's why I said community has become the arguably the most important part of my personal mantra because I've been working on that mantra since 2008. And am I 100% done? No, I don't think I'll ever be 100% done, but I'm more ready than anybody else that I know. And we just don't have that same luxury of time. So you need to bring what you have, whether that's gold and silver or whether that's skill sets like laying irrigation or cleaning out a chicken yard or knowing how to build a house or plumbing or electrical or whatever it is, whatever skill set. And if you don't have any of those, develop them. Go ahead, learn something. Go ahead and go to a farmer's market, get to meet the people that create your food and give them a day or two worth of your labor. You'll learn something. And even more important than that, frankly, is you'll start to create relationship because food becomes the single biggest issue for people as we go through these transitions, right?
Well, I think people are going to have to learn to become more anti-fragile because someone who could have had, say, a couple decades ago, a stable career in technology, software programming, what's coming with artificial intelligence, software, humanoid robots, it's accelerating so rapidly every couple weeks, every month or two, new advancements. I'm just hearing a lot of people and friends that are computer programmers in the tech sector. They're either having to adapt immediately or they're getting fired, losing their jobs, or being told they have to take a pay cut. And they thought that they had a stable career only 10 years ago. So things are just changing rapidly. They're going to have to learn to adapt or they're going to be out of work very quickly.
Yeah, it's true. And I think we're seeing that all over the place too. I mean, I don't think we've really seen anything yet as far as unemployment goes because, a lot of those companies, including even in the tech space, you still need human bodies. I hope we never get to the point where we don't need humans because then what does that look like? But I think we all need to come together in community and take our power back. Absolutely.
Have you seen the Pixar movie Wall-E, where there's a bunch of people on diabetes that are just like at video game chairs and stuff like that, and the robots do all the work for them? I think that hopefully that's not how society turns into. But
Yeah. That movie could be foretelling what we have in the future, but you will own nothing and you're going to be happy. I don't think so.
yeah, it's a Orwellian or 1984 type of dystopian novel there with either 1984 or Soma, the one Brave New World.
Right. Yeah. Brave New World. Wow. They were talking about this in the 20s. right?
Well, I mean, like, didn't they the companies there wanted to come up with drugs like that? So I mean, like, they
Yes.
put it. The authors Orwell said that wasn't his real name. Didn't he say that he was told all this, that this was the plan by what the Bilderberg Group? Well, before the Bilderbergs, the billionaires and the economic and political elites, that they planned this for decades.
Oh, they've been planning it for many, many decades. I don't know exactly to that what you're referring to. However, what I do know is what once was outrageous fiction has become reality. And these things don't happen, you see them overnight, but the reality is yeah, decades and decades. It's the frog in the pot of water, right? You have to do this slowly so that people think it's normal. If you do things quickly, then they know that there's a big change, and that makes all the difference in the world, right? Then they get pushback. If they do it really slowly, then they don't get much pushback. They get more cooperation and they get even further. So yeah, they have been talking about this, and it's been showing up, whether it's in drugs or it's in technology or it's in the surveillance state, for a very long time.
Yeah,
We
to
have,
add to your voice, there's a documentary. I don't know if you've seen it, Lynette. It's from a famous Hollywood director that became a whistleblower, Aaron Russo.
oh
And I
yeah.
think he did Trading Places, which is my favorite Wall Street movie. It was a comedy with Eddie Murphy and Dan Aykroyd and Jamie Lee Curtis many years ago. He put out a documentary before he passed away called America, Freedom to Fascism. And he talks about how the economic and political elites have been planning like cashless society, debasing the currency, chipping people, GPS tracking, and all that stuff for decades.
And it happens to be true, and I did see that. It's a great piece to watch for people to, it seems like conspiracy theory, but now there's some distance, and so it's easier to look back and go, that's the thing about conspiracy theories. So much of it is accurate, right?
Unfortunately, yes. Unfortunately, a lot of it's fact. I mean, like the media spins so much stuff nowadays. Like they were saying you had Jerome Powell saying that there would be no inflation, no no inflation. I mean, I see tons of examples of stagflation here in the real economy. And for people out there listening, they need to find inflation hedges because I see the policies, no matter who's in power in the White House or Congress. We see these headlines, Lynette, about government cutting spending with Doge, but on the other hand, they're about to announce that the debt ceiling is going up by another 5 trillion. So they're like, all the news headlines are, oh, all these Doge spending cuts, but then the debt ceiling's rising by another 5 trillion. On the other hand,
Oh yeah, absolutely. Look, you cannot turn a ship in a thimble of water. And that's what they're trying to do right now. And the ship has to turn. It's not like I think that it doesn't have to turn, but there's a lot of destruction, and the biggest chip is at the foundation of the system. And so you can't shift from one system into another system without massive disruptions. It's like, it's simple. When one currency dies, another one's going to pop up in its place. Physical gold and silver in your possession, not in a piece of paper, is your safe bridge to get you from one system into the other system with your purchasing power intact. And that also means that there will be opportunities all along the way for you to grow your wealth base so that on the other side of this mess, when we're in ultimately the new system, and it's not that easy, it's going to take a while for us to get there, but you're in a much better position and you've maintained your freedom. And that's the big kicker, because if everything is intangible and we are in a full surveillance system, you tell me what options you have if they say jump.
well, especially if they add in like cashless society, social credit score, like in China, I mean, that can come to the US faster than people think. They're talking about now with the real IDs, just to fly on a plane, you have to get a new type of ID. So, I mean, all these things are slowly being implemented. We talked earlier in the conversation about issues with taking cash out of the banking system now. It's already happening, I think, in Europe. They're putting in even more restrictions. So that means they think that their banks could fail if they're putting in restrictions on cash.
Right. So imagine how you battle it, right? All you really have to do is convert your fiat, whether it's digital fiat or physical fiat, I don't care. Convert your fiat money, your dollars, your euros, your yen, into physical gold and silver and pull it out of the system. And that's your vote. And if we can get 3% of the global population, there's 8.4 billion people in this world. If we can get 3% to buy gold and silver, I think that we got a shot at having our voice in the next system. Because if we don't do it and we go to a full surveillance system, what kind of future do you think our kids are going to have?
Well, also, if you're poor and they've destroyed you financially and you're relying on universal basic income, or they've stolen all the cash from your bank account with social credit score, I mean, like, you can't really do much then. You don't have options to leave the country or go start a new business or even speak out against the government, criticize them if you don't like their policies.
Exactly. And we saw that in Canada with the peaceful demonstration, the truckers' strike, right? That was a legal strike and it was a peaceful strike. And, to me, that was so telling when, they didn't like what they were doing. They cut them off at the knees. Oh, you gave one of the truckers $5, you're cut off at the knees. What?
Well, crypto got around that, right? And then they even elected as prime minister a central banker. He was, I think he was born in Canada, but he spent most of his adult life, he's been in England, right? He was a central banker at the Bank of England.
Yeah, and I think he even did some work here in the U.S. I mean, he's a career central banker for sure. So, yeah, what does that mean?
Well, it means the central bankers have way too much control. They're unelected bureaucrats like Jerome Powell and these other.
Yeah, but whether they're central bankers or they're corporations, it's like, what do you want? You want the CBDCs that the central bankers control, or do you want the stable coins that the corporations control? I mean, I don't know who's better. I say you got to be as independent and self-sufficient as possible so that you don't have any one of them in control. And you make the choices that are going to put your best interest first. And that's not what's setting up, but we can make that happen. Maybe I'm wrong, Jason, and I know that it's a really lofty thought. And I'm not even gonna lie to you. There are times I sit there and I go, my God, you're really trying to have a difference in the global monetary system to get sound money, physical, redeemable gold back into the system again. Is that ridiculous? Maybe, but what I know is if I don't at least try, if I don't try, I have absolutely no shot at all. But maybe with the voice that you have, that I have, this conversation, somebody else is going to hear it and pick up the mantle, start to position into physical gold and physical silver. That's a vote. We need to take our power back because really since 1913, all we've been doing is giving up our power. You go into a full surveillance, like, you said about China's social credit score. I mean, is that that's not what I want for my grandchildren. That is not what I want for my grandchildren or my great grandchildren or anybody's children or great grandchildren or great, because that takes us right back to feudal times where you have just a handful of people that own everything and everything else is leased and you work for nothing. And whatever you create, they take it away from you because legally they can do that. You're just a serf.
Yeah, it's feudalism or serfdom. I think that's been the plan for a lot of the governments and the billionaires. They wanted like poor people that could barely get rich. Although a lot of people did get rich, I guess, off Bitcoin, off speculation and gambling. A lot of the younger adults, Lynette, they don't seem interested in gold and silver. A lot of them aren't even diversified. I speak to a lot of young adults, and they tell me that they think that Bitcoin is gold 2.0 and Bitcoin's better, and they'd rather just gamble on Bitcoin because they think it's going to 200,000 or 300,000 or even $1 million.
Right, because they don't really understand what money is. But, and I think you probably do talk to a lot of people, but I also talk to a lot of younger people. And, I'm seeing some, I haven't done a survey to say more this way or more that way, but I have a lot of hope because I do see a lot more younger people that are asking questions. right? About gold, about money and what this really means. And it's a lot of the younger people, especially in places like South Korea and China. I don't know no, here too. It's alternative, right? Wall Street is having a bit of a problem because younger people that were promised one thing have gotten there and they're not getting it. They can't buy a house. If you do what you're told to do, you have the kind of job that pays you enough money so you can buy a house, you can educate your kids, blah blah blah. The younger people realize that that's a lie. It's not true anymore. And so I think they are turning away from the traditional. And yes, they are going to the alternatives, but I'm seeing younger people having more interest in gold and silver. And so I embrace that because it's not old people like me that's going to really create the biggest part of the revolution. It has to be the younger people coming into the system. And
And
so
I and I'm not anti-Bitcoin. I mean, I own Bitcoin. I just think it's kind of foolish for anyone to go all in. There's people I know that put all their money into real estate, like rental properties, or all into Nvidia stock, or trade the stock market, or all into Bitcoin. I think that's foolish in this environment because the tax laws could change.
right.
We could see Bitcoin tax more if the governments are super serious about accelerating towards central bank digital currency. We could see insane tax laws put on private crypto.
Right, just like we do on gold. Right? That's what they use. It's called nudging you in a direction that they want you to go in. So yes, we could see anything. We could even see a gold confiscation. That's why personally I prefer the collectibles because it's less likely to be confiscated. But desperate governments do desperate things. And they're not going to just roll over and go, oh, okay, here's your power back. We have to demand it. And so that's the point of I at Zang Enterprises, we promote sound money and community. In community, it's the local community because you need to create that security and that surety in all of those 8 mantra pieces, food, water, etc. But on a global basis, if enough of us do it, because this is a global issue, if enough of us buy physical gold and silver, then yeah, let's have a say in the new monetary system. Let's have that playing field leveled. And there are some things that I'm seeing that I can see that happening, but I also see that they're not sharing a lot of this information because they don't want the public to know. And I'm kind of, in my mind, I'm kind of thinking about the tokenization that is a huge push in the corporate, in the DeFi, as well as the traditional banking system. Tokenizing, turning assets that like this. You can't see me because it's just it's a conversation that we're having, but I'm sitting and I have a piece of physical gold in my hand right now, and if they can digitize that, boy, it's just the rights. You still can't convert into it, but they could create a whole lot more collateral, couldn't they? And they could pull what has been heretofore beyond their reach, maybe into the financial system and entice you through that nudging to actually, if you have any equity, you're holding it on your phone, you're spending it.
Wall Street will do anything for a profit. They'll turn anything into a derivative. I think now because private equity is collapsing because the Fed didn't cut interest rates, they've been packaging this garbage up, these private equity investments that are losing tons of money, and they're packaging them up now and trying to dump them onto pension funds and retail investors. So they did that with mortgage-backed securities and collateralized loan obligations and that type of stuff prior to the 2008 financial crisis. Looks like they're trying to do it again with private equity stuff.
Oh, 100%. I've been talking about private equity for a while, and, cheap money funds anything. And what people don't realize is, well, not only has private equity infiltrated all sorts of areas, but one area that people always feel safe with is insurance. Oh my God, they've gone in, they've bought the insurance companies. Now they're creating garbage products, kind of like what you were just talking about, to sell to these annuities, to these other insurance products, and they're all garbage.
They did worse than that, Lynette. They've been buying up doctors' offices, medical groups, and veterinary offices, and then their business model is to just jack up the prices on the customer. They're not even offering the customer anything better. The goal is to just keep raising the prices and do insurance fraud and overbill your insurance company.
Yeah, absolutely. I mean, it's this is why the system has to reset, Jason, because every time there's too much garbage in the system, it has to reset. So there's no purchasing power left. Which means that there's no more wealth in the currency to inflate away. They have to attack your principal, or they have to go out and they have to find new collateral to leverage. And that's your collateral. And remember, who went to jail after 2008's great financial crisis? Who went to jail?
Pretty much no one. I think Goldman Sachs threw one middle level manager they threw under the bus.
Right, exactly. Why? Because it's all a contract. And every contract is counterparty risk. And so people are putting their money in this garbage and they don't read the contract. Whose benefit do you think it would be written for? And when you look at the ownership string, you were talking about that before. Well, it's hard to pull your money out of the bank again. It's not your money, right?
Because they view us as what, unsecured creditors or something like that when they were doing a
Legally, that is exactly what we are. We are loaning that money to them. But even when you buy a mutual fund or an ETF or a stock or whatever, if you don't hold it, you don't own it. That ownership comes at the very tippy top, and that company is owned by all the big banks, the usual players. But they are the only legal registered owner. You are down at the very bottom as the quote unquote beneficial owner, but everybody between the top and you at the bottom are also beneficial owners. And so you were talking about hypothecation and rehypothecation. Well, that is taking customers' collateral and leveraging it, borrowing against it for the banks or the DeFi or whatever, for the corporation's benefit, not your benefit. But in the end of the day, when we get a full hyperinflationary explosion, which is what I see happening, it'll be a hyperinflationary depression. Well, what happens to all of that collateral when you have, I don't know, and if you do it through this country, you can use it to 140% of its current market value. So that market value declines, you got a problem. If you do it through the City of London, you can use that same collateral with no restrictions. So 500%, 1,000%. So if that whole system collapses, what happens to that collateral? It gets sucked into the void, just like we saw in 2008. But in 2008, the central bank hadn't started running their balance sheet hugely yet. It was like, 800 billion?
Yeah, and it got to what, nine over the Fed's official balance sheet got to over 9 trillion at one point before it started to correct.
Yeah, exactly. And we're still up at nosebleed levels. That's the only tool they have is money printing and the final destruction of the confidence, because there's no purchasing power left. Go to the Federal Reserve Education Department and put in the search bar purchasing power of the consumer dollar. And you're going to see very obviously that there is a big fat zero very near where we are right now. The only thing holding it together is this very thin layer of confidence. And my God, every week, those confidence or those sentiment or those expectation numbers just keep getting worse and worse and worse.
And I think that's one of the main reasons why these other central banks, they're just monthly dollar cost averaging more gold. And it's accelerated a lot the last 3 years. The Russia sanctions, I think, were the final straw that these other governments just said we're fed up with DC policies. They're going to keep running budget deficits. They're going to keep trying to steal our funds. They're going to keep debasing the dollar. And we're not going to hold treasuries long term. I think that's it really backfired. It was a kind of a Looney Tunes moment there where Yosemite Sam tried firing at Bugs Bunny and accidentally shot himself in the foot.
I like that analogy. It definitely works. Though I'd also put in Roadrunner there, who is fast running off that cliff.
Well, I mean, like Roadrunner for some reason doesn't die, and then Wile E. Coyote is the one who ends up taking all the pain. So the U.S. consumer is more like Wile E. Coyote. There, we're the one that gets hit over the head all the time and is near death. So,
Absolutely.
well, I want to thank you so much for your time today. If my listeners want to follow you on YouTube or social media, how do they do so?
Uh, at the Lynette Zang. So YouTube and Twitter at the Lynette Zang, Instagram and Facebook at Lynette Zang. Definitely, I'm also tracking the sound money movement, both locally in the U.S. states that are legalizing gold and silver as money. It's so important. As well as globally, but we are here to be of service, and we're fighting for the population, the public, to take its power back through sound money.
And people are starting to wake up. They're noticing, I think, with the higher gold and silver prices. So people who didn't buy any gold or silver the last couple of years be like, oh, they don't know what they're talking about. The gold price is not going up. The silver price is not going up. I mean, we have started to get some movement. I remember, Lynette, I was started buying silver when it was like 12, 13, 14, $15 an ounce. I have friends who are buying it $3 or $4 an ounce. They bought a lot back then. So over time, this does go up. Over time, you do get an inflation hedge or a currency debasement hedge. It just doesn't all happen right away. I think that's what a lot of people just don't have the patience for this.
Well, yes, we've been taught instant pudding, right? You want to make a choice and you want the impact. But for me, I look at it like, what a huge advantage, because I am so clear that Wall Street will never, ever, ever give me a clear valuation, a real valuation of any assets or any of their instruments. So I do believe so strongly, Jason, that we need to know how to determine what's this really worth. And I can tell you for an absolute fact, because of how money is created from debt, that the true fundamental value of 1 ounce of gold is somewhere north of $40,000. So even at 3,500, 10,000, 20,000, 30,000, it's undervalued. If you're counting on Wall Street to tell you the truth, there is this bridge in Brooklyn. I don't know. Tell it to you, right?
Beachfront property in Arizona too.
Well, that may happen when California falls into the ocean, but yeah, exactly. So you can't. Do you trust them? And if you do, why? I mean, how many times can you be lied to and you don't know the truth? And all they ever do is lie. That's their job.
Well, sales and marketing, you worked on Wall Street, so you know that they're talking their book. So if they're a bond fund manager or they have the stock fund and a bond fund, and the bond fund's losing money, they're not going to go on business television and talk about the bond fund losing money. That the bond fund lost billions of dollars. They're going to talk up the stock fund that did well, so they get more customers to come in for their stock fund. That's just Lynette. I know a lot of hedge fund managers, and they're not necessarily gold bugs, but they bought gold, silver, Bitcoin. They don't manage it for their customer funds. So for their own money, they're not being judged, on quarterly returns for their investors. They own gold, silver, and Bitcoin. But like when they go on TV, they don't talk about that because that's not what they're getting paid to do.
Exactly. Yeah, exactly. But I think it's critical that everybody becomes their own central banker by laying in sound money, physical gold and silver in their possession. And our strategy is based upon those repeatable patterns and all the studying I've done on currencies and currency life cycles since 1987. It's a long time.